Hello, everyone, and welcome to our webinar brought to you in conjunction with Apex, discussing if CPO prices will continue rising. This is Ming Hui from Phillip Futures, and sharing his expertise with you today will be Mr. Avtar Sandu, our Senior Commodities Manager at Phillip Futures. If you have any questions through the course of the webinar, please feel free to send them to us via the question box, as we'll have a Q&A session towards the end. And without further ado, I will hand the session over to Avtar.
Good evening, everybody, and welcome to the webinar. The primary question or the title is will CPO prices continue to rise? Before we go into it, primarily we have a disclaimer. This is regulatory, and what I'm going to tell you and what others can ask is primarily for educational purpose only. Okay, so let's look at what we're going to cover today. We will start off with the commodity interviews overview, where we look at the key market drivers driving commodities all over the world, then a little bit on macroeconomic fundamentals and geopolitical issues. The reason why is this: most of them have do some bearings on commodities. Then we will go to the market recap, where we will primarily take a look at the fundamentals of CPO, supply, demand, weather, and inventories. Further, we will look at the role in the markets of other edible oils, and we will also look at factors like seasonality and the correlation of CPO with other edible oils. Then we go down to common policies and the various countries which are primarily in the CPO suite, that is Malaysia, Indonesia, India, and China. Next, we'll look at the price assessment. We'll look at what the top analysts in CPO are saying. Further, we also will look at the price outlook for the Apex CPO, and also how one can invest or trade in the Apex CPO. Okay, let's start with the commodity price check, which primarily we know has been dominated by three related macro themes. The first one is the US-China trade conflict. Also, how much stimulus China is going to pump into the market. Of course, we know that the trade conflict has been bearish for commodities, whereas the Chinese stimulus is bullish. The third factor is the US rate cut cycle, which varies from commodities to commodities. In the end, it's bearish for some and bullish for others. Okay, and the most important thing is the macro drivers, primarily supply shortfalls, which are bullish for the markets. Although the three macro factors have been dominating most other commodities, but for CPO, they have taken slightly a backseat. For CPO, the fundamentals, supply, demand, weather, and the inventories take a prominent role. Okay, let's look at the financial conditions before we actually start with S, because the financial conditions do have an effect on macroeconomic themes, which then affect commodities. Against this background, of course we have the China and US tariff increases, which has affected quite a number of agri commodities. It has also affected global growth, which is actually originally forecasted at 3.2% this year, and it will pick up to 3.5 in 2020. Of course, it's slightly lower than the previous years. Investment and demand for consumer durables also has been subdued across advanced and emerging market economies. Firms and households continue to hold back on long-term spending. Okay. Together with all this, the soft trade, the muted inflation, and weak final demand, we have had an impact on the global finance conditions, where a number of the central banks have signaled a dovish shift in monetary policy. Next, we take a look at the macro commodity price indexes. We have quite a number of the various groups: energy, metals, and agriculture, which you find since January 16 has been increasing steadily as a group. But food prices have not kept up pace with the increase in the other asset class in commodities. Okay, then we just go on to the crude palm oil long-term chart, which primarily since 2010 has been within the range of $1,300 per ton to $400 in US dollar terms. The peak was primarily in 2011, which we hit almost $1,300 per ton. Currently, we are on the low end of the range, roughly around $510 per ton. The low has been recently has been just about around $460 a ton. Next, we go to look at the Apex Palm Oil December futures contract and what it has been doing since June. Most of you would be aware that there has been a rally in palm oil prices ever since June. We'll delve with the factors later, and a peak in the August, September, and a price retracement since then. We do believe that this price appreciation was overdone too fast and too high for the time. And of course, some setback is inevitable. And we are expecting it in the near term. You'll find here double top, which could not sustain prices, and the prices fell off, and it is retracing slightly. But we do believe that it is confined to the medium term, the near term, the medium and the long term is a different scenario which we will deal with later. Okay, then let's look at the palm oil stats, the world balance as in terms of production, consumption, ending stocks, and stocks to use ratio. You'll find that production has increased over the years, but the growth has tapered off in the 2019-20 forecast. Same thing for consumption. We have consumption increasing over the years, right up from 2015 to 2016, but the rate of growth has tapered off. We have 11.5% growth in the 2018-19 season, and currently it is for the 2019-20 season we are expecting 4.3 change. Same thing with the ending stocks. We find that the ending stocks are much lower than the previous season. The last row is extremely useful in trading. In a sense, it's a ratio of the stocks to consumption ratio, and we find that ever since 2015 and 2016, it has been increased slightly to 19.5, up, down, but this coming season, we do have a lower stocks 16.7 stocks to use ratio. The stocks to use ratio is one figure that most traders use to gauge whether prices are going to be bullish or bearish for going forward. Next thing, we will look at the production growth, which may cost global deficit of palm oil in the 2019-20 season, and primarily the statistics that I've just shown you, right, inevitably supports this conclusion. Thus, demand rationing is inevitable, resulting in increasing concern, mostly among consumers, that a bullish scenario may form in palm oil. There is a slowing down of production growth, a widening production deficit, and thus a need to reduce stocks. The magnitude of the deficit is still not definite going forward in the 2021-22 season, but in the roughly we can get an estimate in the 2019-20 season. Okay, let's go down to look at the CPO production and consumption charts. This graph, if you look at the two circles drawn on the screen, you'll find that the 2015 and 2016 scenario is roughly similar. Most times you find that production is ahead of consumption, but for the 2019-20 season, we do have consumption ahead, and this is similar to the 2015-2016 season. Okay, and if you go back to the slides again for the stocks to use ratio, you find that these figures for 2015-16 to 2019-20 are highly similar. I explain the significance later. Okay, but from the current 2019-20 September 20 current prospects are primarily for a slowing down of growth. So, and as we said, demand has started to exceed production. The stocks, as you will see later, are starting to decline, and thus the price appreciation lately of the CPO from the June-July months. So, and this trend for consumption to increase above production is expected to continue, as we shall see later. Let's go on to stocks. You find that the world stocks has been increasing since the 2015-2016 season, but in the coming season, it is forecasted to taper off from the trend that was previously. Based on current global production estimates, world palm oil stocks will be seen declining by approximately 1.3 million tons. Next, we go on to look at top producers. Of course, we all know the top producers are both Indonesia and Malaysia. But if you see the rate of growth, you find that if you draw a trend line down up from the previous year's growth, you find that most of the production is below trend. Same thing with Malaysia. They're missing out on the trend itself, and they're not keeping exceeding the trend line growth. Next, you go on to see who actually imports palm oil. Of course, we have number one in India. Then we also have the EU at 7 million metric tons. Then we have China and Pakistan as the fourth most important importer. For the EU itself, you find that we don't have significant growth, whereas for China and India, we do have good growth, where for Pakistan, it's relatively flat. Next, let's look at the top domestic consumers. These are very different for importers in the sense that we do have Indonesia, which although they produce quite a bit of palm oil, they are also a large consumer of the CPO. Rather, I would say they would consume only more than anything else. The figures in metric tons are on the chart, and you find that we have India, then followed by EU, China, and then Malaysia. World consumption, however, is not expected to increase. You would expect total to 80 metric tons in the October-September season, which would be a little bit above the, I would say, the trend line growth. Next, we will find a chart that most traders would find educational. We do have the put the ratios and the periods just below. What it means during this period itself, we did have during the 2015, 2016, the stocks to use ratio is about 16.1. Here we have around the late 2016, we have 17.8, and here up in July 2017 we did have 20.9, and it's back here now. Okay, what you find when the stocks to use ratio is low, you do find prices appreciating. This is common for most agricultural commodities, other things being equal, where the stocks to use ratio, if it's lower historically, well, generally means a bullish market. Here also you find the stocks to use ratio and prices have start to appreciate above the lows. Next thing when we need to bear in mind when trading commodities is primarily seasonality. Most of the time, we do find palm oil prices are generally dropping till the middle of the year and then appreciating up for the rest of the year. This is generally true for most years, although there are exceptions to it. So it's particularly useful for producers because producers will tend to hedge in the first half as the downside is low prices, and consumers will tend to hedge in the second half where the prices are appreciating and their concern is high CPO prices. Next thing also you find the seasonality of export volumes where exports do increase in the second half as compared to the first half. Next thing you need to look is for trading commodities like CPO is the weather itself. We did have dry weather recently in many of the growing areas of Malaysia and Indonesia, particularly in the last few months. This situation needs to be monitored closely, and if we do have below normal rainfall in the next few weeks, this will start stressing the oil palm trees, which would then affect production in the usual time lags. Time lags are normally between 8 to 10 months. The West Kalimantan and the Southern Sumatra areas would be affected most, and we do expect a slowdown as a result of this in palm oil production in the next season. So far, we have covered the primarily factors that affect palm oil. We have looked at demand, supply, the inventories, and of course the weather. Next thing we look at palm oil. As you know, the palm oil is edible oil. It has its place in the edible oil market. And what you are seeing is a chart of the other edible oils. Palm oil occupies the majority share in the edible oil market, followed by the next important one, which is soybean, and of course sunflower and rapeseed. Okay, then let's look at the production of the other oils. The other production and its fundamentals and stocks and the weather effect are also important, as many of these are substitutes for palm oil. For example, if palm oil prices are too high, uh, users might switch to soybean oil or rapeseed oil. Uh, so let's look at the 17 major oils and fats together. You'll find that over the years, of course, production has been increasing, but the rate of growth for the next season is tapering off. Same thing with consumption. Consumption has been increasing over the years, uh, but growth is tapering off again. Ending stocks have fallen, or is expected to fall in the 2019-20 season. And most importantly, the stocks to use ratio has fallen off and is expected to be around the same as the 2015-16 season. So next we look at the correlation between palm oil chart, which is a white uh, line, and the palm oil, the soybean, which is the white line, and the palm oil, which is the red line. And you find they have a very strong positive correlation, varying from 0.4 to 0.7 over the years. Currently, the correlation is a little bit off because of the effect of the trade wars and the planting season, but it's still very positive. Next, we look at the soybean oil, its supply and demand. The primary reason for this is because soybean is the next keen competitor of CPO in the edible oil markets. We find for palm oil, we do have great figures, but for soybean, for production, especially of the US, because of the planting season, we have given a thereof estimate of 11.5 million tons. What is critical here is if you just look at the stocks to use ratio, you find that soya oil market is also has a lower stocks to use ratio than the previous years. Let's look at the quantum of soya oil and palm oil export prices in the various countries. We have Argentina, Brazil, and the US large oil exporters, whereas for palm we have Indonesia and Malaysia. Here we find the Malaysian price, the Indonesian price, and the export prices of the soya oil producers. You find that there is a gap, but and the palm oil has a discount relative to soya oil. But we do expect the palm oil prices appreciating much more than the soya oil prices. We do expect this gap to narrow. Of course, the extent of the price increase will depend on price elasticity of consumption, and then the extent of other fundamental factors such as the biodiesel policies of the producing countries, which we will deal with later. Uh, okay, as I mentioned about the biodiesel policies, especially for Indonesia, uh, this policy has been quite important, or rather a price driver for CPO prices also. If you look at the picture here, the Indonesian president wants uh, the B30 policy in cars to be implemented as soon as January next year. Also, further, we find that Indonesia is also a large exporter of biodiesel, primarily exporting quite a bit of their biodiesel to countries like the EU and China itself. We do expect the uh, export of biodiesel to the EU to decline, but the Chinese market will remain vibrant for biodiesel exports. Indonesian exports, if we do look at the nitty-gritty, we find that the exports to India has decreased in the last year, in the 2018-2019 season. However, China has taken in a lot of exports from Indonesia. ASEAN also, you might be wondering why uh, ASEAN is taking in so much of exports from Indonesia. The primary reason is previously Malaysia had what do you call a tariff advantage for exports of oils to India, and Malaysia has actually imported quite a bit of CPO to be processed and export to India after that. Okay, if you look at the rest of Asia itself, you'll find that there is good growth for exports from Indonesia itself. Next, we look at Malaysia, where we find that we have rising production in Malaysia. The 2018-2019 season, we did have good production in Malaysia. And also, if you look at the next chart itself, you'll find the huge range of exports that have ballooned in the 2018-2019 season to India itself. Whereas for the EU, you find it's relatively flat over the years. China is also a good market. The rest of them are relatively flat also. This increased this year has been quite significant in holding up prices of palm oil also. Next, we find the Malaysian, let's look at the balance of palm oil, both the crude and as well as the processed oil. We have production of over the years increased, exports have increased, ending stocks, however, has dropped. And the stocks of CPO are relatively flat, but the stocks of processed oil has fallen off the last season. Then we look at the Malaysian uh, relationship between the production and exports. Last season we have uh, an amount that is slightly less than the previous season. The gap between the exports and production is narrowing as we go forward. Next, we look at the Indian scene where the Malaysian palm oil and palm olein, after the imports rose 49% in India itself. What has happened was the Indian government had recently moved to hike import duty on processed palm oil by 5 percentage points to 50%, thus eliminating Malaysian the advantage from the as compared to the other exporters. Thus, Malaysia has been taking export share from others like Indonesia and Thailand, but this one going forward will be almost nil. And here you find the imports of palm oil from India. From Malaysia, you find significant growth from 109 to 178,000 tons. Let's go on to India again. Here you find the Indian stocks because of the imports from Malaysia increasing, whereas the ending stocks over the years have been seasonally falling towards the end of the year, whereas here we did have an increase because of the tariff duties being imposed were taken away previously, and once it was imposed again, we do expect the stocks to taper off. Rest, if you look at here, we do find Indian ending stocks increasing for the same reasons for palm oil, whereas for the other oils, relatively flat. Then look at China itself. How much China actually do import. CPO also depends on the state of their economy. We do have the economy setting to slow in the coming months. Real GDP growth is 6 to 6.1%. What we are concerned here is the final demand, which is going to be an issue and will. But however, since CPO is an edible commodity, and quite inelastic demand in China itself, we do expect imports to increase from China despite the slowing economy. Okay, if you look at the ending stocks for oil and fats, especially palm oil, soya, and rapeseed oil, you find that for till August itself, the stocks are dwindling for this year itself, whereas for the previous years, we do have stocks that appreciate through the end of the year. There's a dichotomy in the ending stocks for this season itself. Same thing with palm oil, soya oil, and the various rapeseed oil breakdown. We do have all the three of them dropping in numbers as August progressed. Next, let's look at the rising exports, imports from China. China, as you know, is one of the bigger players in palm oil imports. We do have quite a number of uh, trendline growth in Chinese imports, and also besides the imports, we do have the palm oil imports also growing. Okay, the black line is primarily for all the oil and fats, and we do have forecasts for palm oil to grow also. Well, we have covered quite a bit on the fundamentals of palm oil. Let's see how we can take advantage of uh, all these fundamentals. Uh, we know that the Apex has a palm oil futures contract. The details of the contract specs are here. Right, the contract code is CPF. The contract size is 10 metric tons, which is much smaller than the other major contracts. It is quoted in US dollars, uh, and the tick movement is 0.25 per metric ton. The trading hours are primarily from 9 to 6 o'clock with a break in between, and we do have a night session. Contracts are quoted 12 months ahead. The last trading day of the front month is the 15th calendar day of the business month, and it's a deliverable product with the last calendar day of the delivery day. Next, we look at the Apex CPO contract from December contract from July. We know the prices are appreciated till August, and prices have gone off. Uh, if you look at the indicators of the RSI itself, you find that it is finding support in the oversold area. Same thing with the charts itself. We do expect we don't expect prices to fall off below the $500 per ton level. The cost of production for CPO roughly in dollar terms is about 400 US dollars per ton, whereas currently because of the expected future uh, conditions that we have mentioned, we do expect markets to consolidate around here, maybe taper off and uh, test the $500 per ton level in the very near term. But I do suspect that palm oil prices will move sideways until uh, the next 2 months, and then we will find uh, palm oil prices appreciating. Uh, let's recently we had the in fact last week we had the Globe Oil Conference, which is one of the major conferences where price outlook is discussed, and we do have all the gurus of palm oil having their say. Let's look at Thomas Milky. Thomas Milky is the director of Oil World, which is one of the most prestigious outlook weekly magazines. He says production in Malaysia in 2020 will be slightly lower than 20.5 as previously estimated. We also expect palm oils to find support in the next few months, averaging prices uh, seen at $580 FOB Indonesia. Palm oil imports by India may climb to record highs in 2019-2020 as purchases are seen near 10 million tons. Next thing, the Director General of NPOB, Gulam Kadir, he says Malaysian prices may rise to uh, 2,200 ringgit to 2,300 ringgit a ton in the October-December quadrant. Currently, it's hovering around 2,150 ringgit per ton. Our stockpiles may not exceed 2 million tons. This is 3.2, which was last year. Next, we have James Fry, who is chairman of LMC International. LMC International is a prestigious commodity advisory. We have CPO prices which are unlikely to move, he says, until the next quarter next year, but will react to several factors then, like big cuts in fertilizer used, impacting yields, slow growth in Indonesian output this year, and a boost in the biodiesel mandate. All these factors would cause stockpiles to fall and leaf prices, as this is a European advisory getting for European. He says that prices in EU, that is when we import prices, would lift prices by at least $75 to $620 per ton in the second quarter. Let's look at palm oil analytics. Dr. Satya Varga, in fact, he says that the prices are seen in the range of Malaysian ringgit 2,000 to 2,000 in the October and November months. However, in Q1 next year, he does expect appreciation in prices of to 2003 to 2004 because of lower output, declining stocks, as we have discussed, and strong buying rate of Chinese New Year festivities. Ramadan buying also towards the end of Q1 will also support prices. Prices for CPO FOB Indonesia is forecast between 530 to 550 in the first half of 2020. Lastly, we have Dorak Ministry. Dorak Ministry is analyst that is always speaks at major conferences. They say price outlook will depend on crude oil prices and implementation of the biodiesel program in Indonesia. What it means is basically how successful will be the B30 program be. The discount between palm oil and other veggie oils are also seen narrowing, and the ministry maintains its palm oil outlook out of Malaysia in 2019 as 20.3 metric tons. Okay, going forward, let's recap the bullish and bearish factors that we have taken about. Overall prices, we find that we have bearish factors near term and bullish and medium term factors in the long term. Okay, next bullish factors, we know that production of palm oil and all veggie oils will lose momentum in the 2019-20 season. Looming production deficit will lead to a significant reduction in stocks in the next 12 months, which are bullish for prices. Then we have strong import demand for CPO is shaping up. Indian importers are reportedly poorly covered. Chinese vegetable oil imports are seen continuing. Then Indonesian plan to raise biodiesel admixture in 2020. All these are expected to be bullish factors. And lastly, we find that palm oil prices are relatively low as compared to historical highs. This is a monthly chart of crude oil prices since 2004, and we find that prices now are hanging in the low end. Then going forward to the bearish factors, we find that China may step up purchases of US soybeans. There is news that it has already been done, as according to the papers. How much it actually buys is still conjecture. A seasonally large production and temporary export now would take a lid on palm oil prices and stock levels in the near term. This has resulted in crude oil palm prices retreating. We do have a correlation between palm oil and crude mineral prices, where falling crude prices will tend to drag palm oil prices down. Okay, let's conclude to our outlook. We do expect CPO prices to find support in the coming weeks in this quarter and strengthen towards the end of the year, or most probably in early 2020, based on a forecast that growth in palm oil production will slow, consumption will exceed productions, and stocks will decline. Okay, let's go on to you, where if you have any questions, you can just forward it to us. Okay, since you do not have any questions, you can always talk to us at our websites, and you can follow us on Twitter and YouTube. And if you are keen on opening an account to trade HKEx CPO, you can visit our futures website. Over to Minghui.
Thank you, Avtar. That was a very insightful session, and thank you everyone once again for attending this seminar. And if you have any questions after this, you can send them to us at futures@phillip.com.sg. We will provide you with the answers within the next working day. We're going to end the sessions now, and for more webinars and seminars, you may visit phillipfutures.com.sg. See you next time, and goodbye.